Hey everyone, welcome back to Corporate Decoder. Today we're diving into Repligen's latest filing, and let me tell you, it's got a plot twist or two that even M. Night Shyamalan wouldn't see coming. I'm talking about some leadership shakeups and a look at how they're paying their top folks. First things first, mark your calendars for May 15, 2025. That's when Repligen is holding its annual meeting. It will be a virtual meeting, so you can attend from the comfort of your own home. Shareholders get to vote on important stuff like electing directors and approving executive pay. No filing fee was required, so that's a plus for Repligen. Speaking of voting, there are 4 key proposals on the table. The first is the usual election of 10 directors. Proposal number 2 is about giving a thumbs up to Ernst & Young LL as the company's independent auditors for the coming year. Then there's the say on pay vote, where shareholders get to give their opinion on how the top executives are being compensated. Finally, a notable proposal to amend the company's certificate of incorporation to limit the liability of certain officers of the company as permitted by Delaware law. Olivier Loyot, the current president and CEO, is on the list, along with Tony Hunt, who transitioned from CEO to executive chair. There are also several independent directors with experience in biopharmaceutical manufacturing, finance, and commercial operations. The board seems to be working on their diversity. It is always good to see a company focusing on including multiple perspectives and experiences, also making sure they have a variety of skill sets. Repligen highlights their commitment to good governance with independent directors, board evaluations, and a code of ethics. They also emphasize shareholder rights like annual director elections and proxy access. It looks like Repligen cares what its shareholders think. They talk about regular meetings and discussions with investors, covering topics from company growth to environmental and social responsibility. Let's take a peek at who owns Repligen. Big institutional investors like T. Rowe Price, BlackRock, and Vanguard hold significant chunks of the company. Olivier Loyot, Jason Garland, James R. Bylund, and Ralph Curiel all have some skin in the game, but in far lesser amounts. Tony Hunt has a decent amount too. Time for the numbers, people. Let's see how the auditors did. Ernst & Young billed Repligen approximately $3.3 million for audit services in 2024. A good bit more than the $2 million in 23. Tax services cost around $437,000 less than the close to $720,000 spent in 2023. A few thousand in additional fees for online accounting research. All these services were pre-approved by the audit committee, meaning Repligen is doing things by the book. Here's where things get interesting. The advisory vote on executive compensation, the say on pay proposal, lets shareholders weigh in on whether they think the top execs are earning their keep. In 2023, shareholders seem to approve, but what's changed since then? Repligen aims to attract and retain high-performing talent, reward effort, and align executive interests with those of shareholders. We saw some changes. Olivier Toulu into the CEO role, while Tony Hunt became executive chair. This is reflected in the total NEO compensation table, where the 2024 compensation is prorated. A $5 million equity award was made to Mr. El Hio for his efforts, and a lower annual base salary of $40,000 and target annual bonus to Tony Hunt for his shift to the role of executive chair. Let's talk numbers in 2024. Olivier Loyot made roughly $7 around $2 billion, and James Bylund close to $4.2 million. Tony Hunt took home a whopping $20.3 million. Tony Hunt took home a whopping $20.3 million. Indwelted by the way the accounting rules work when his contract was amended. However, you need to know is that the way accounting rules work when his contract was amended. However, you need to know is that the way accounting rules work when his contract was amended. However, you need to know is that the way accounting rules work when his contract was amended. However, you need to know is that the way accounting rules work. That number is misleading about cash in pocket. Tax and accounting considerations are taken in terms of retaining flexibility to design executive compensation programs that meet business objectives. The company does not try to make equity awards when they know something the public doesn't. They have an audit committee, compensation committee, and nominating and corporate governance committee. They all had their meetings and have a charter that is reviewed annually to make sure that they are up to par. The audit committee does what it has to do, appoints, oversees, and approves the compensation of any compensation advisors. So what's the story here? Repligen is going through a leadership transition and the compensation structure reflects that. It's all about incentivizing the new CEO, Layot, while still compensating and utilizing the experience of Hunt in his new role. Now let's zoom out and assess Repligen as a business. They are expanding their potential sales and customer base. Their presence in new areas of biology is growing, but their reported revenue is roughly flat. They did make an interesting new acquisition, however. They closed the acquisition of Tanti Laboratory Inc. in December, which fits their existing strategy and is expected to accelerate growth in new markets. It's also worth pointing out that those performance-based bonuses we talked about didn't pay out this year, meaning management missed the goals that would trigger them. This is likely due to those challenges in growth and increased revenue in their segment. This is good because the leadership is only getting paid if the company is doing well. Before we wrap up, there is an important proposal up for vote at the annual meeting. Proposal 4, which asks the shareholders to vote to amend the certificate of incorporation to limit liability of certain officers of the company. It's good that they are not concerned about this TAF, so where does this leave Repligen? While sales have leveled off a little, they are doing all the right things to secure their market positions, trying to develop new products and making sure shareholders are aligned with the company vision. The changes in top management are likely the main reason for some of the numbers and are also likely to pay off in the long run. That's my take on Repligen. If you found this breakdown helpful, don't forget to like, comment and subscribe for more deep dives into the corporate world. What are your thoughts on the upcoming shareholder meeting? Let me know in the comments below.